Hello and welcome to another Gold US dollar technical analysis. So my last video, which was about, I think, 13 days ago or something, almost 2 weeks, I had a look at gold and proposed that this might be or was likely to be an ABCDE triangle formation, which looked pretty perfect. And then gold should head down into such an ABC correction move, the last move to top of this Z move basically. But yeah, as it turns out, this does not seem to be the way gold moves, so I will remove this right now. And I even have to put this triangle in question. I mean, it looks perfect, and you could argue that this on one hand, this could be a correctional triangle, A, B, C, D, E, and then, obviously the next move should be facing down, but we got this move up. So you could argue that this might be a leading diagonal triangle, which implies that the next move should be up and very dynamically. But then all of those moves have to be so like this A move, this C move, and this E move, they have to be 5-part moves. And in my opinion, I went into the hourly chart just a couple of minutes ago. This could be counted as a 5-part move, but I find this really hard to count. I mean, you can see here we have overlappings within those moves. I mean, in a leading diagonal triangle, let me just paint this in. So if this was a leading diagonal triangle, this would be a 1, 2, 3, 4, 5. And this is the only formation where a overlapping of waves is allowed. So wave 4 is allowed to go into the price area of wave 1, and all the other waves are allowed to overlap. But those formations are really, really rare, and I think the times some of those occurred in a larger time frame, I think you can count them on one hand, basically. So they are really rare. And in my opinion, I'm not so convinced that this is a leading diagonal triangle, which implies already now a rally up to to new highs, basically. However, I probably have to take this away, but no matter how long I looked at the chart, I did not come to a satisfactory conclusion as to where gold is right now. I mean, there are a couple of scenarios. Obviously, right now I have something along the lines of this WXYXZ correctional move, but we might be in the second X right here, place this Z down there, and move all of those over one more time, maybe to something like here and here. I mean, I looked at the chart just a couple of minutes ago, and there are a lot of possible ways to count this. I mean, if we get another X wave right now to this area and the drop follows, this could be some kind of a flat move, but then again, you'd have to calculate the length of this W move, and this would determine the possible length of this Z move. So there are a lot of scenarios, but I think the most important essence right now is that this area here, where I placed this straight horizontal line, this is a pretty significant resistance area. So there's as long basically as gold stays below this $15, $17, $15, $20 range, in my opinion, it's still correctional and in no way yet a bullish move. And to me, this, in my opinion, this cannot be a leading diagonal triangle, so this pretty much rules an impulse to the upside out. And so we have to have correctional targets that are basically below this high. And in my opinion, maybe there's even a turnaround at this at the utmost at this $15, $17, $15, $20 range, and then another move down. I mean, right now we are in the holidays. The year is about to end, and of course there are a lot of market participants that want to secure their money and whatnot. I mean, we had the case with the Fed pumping money into the markets with those repo deals. And those are all factors for uncertainty in the market, and a lot of participants could be looking for a way to secure their depots or something. Maybe we can even put this there. Yeah, so in my opinion, I don't know. I don't see this as an impulse yet, but what we can definitely say is that we are probably in a similar situation to this. I mean, if you look at this, yeah, pretty much the start of this rally, you can see it's gone down, up, down, up, down, up. You could have thought this was the start of the rally and then another move down. So in my opinion, this might be a larger version of this formation, basically. Yeah. So in my opinion, gold just is not done yet, and I'm still waiting for this one more move. I mean, if this doesn't happen, so be it. As a trader, you have to be adaptable and react to markets that behave differently than you expected, because it happens quite a lot. But you always have to be aware of very important price ranges. One of those price ranges, obviously, is this $1,517 or $1,520-ish, this range up here. I could draw a square onto this range, but I think this line should be sufficient for the moment. The other important price target, obviously, this low down here. I mean, there's been a lot of significant buying interest, and we come into this area of possibly this previous wave 4. So if gold decides to go down one more time, somewhere in this area, there should be the definitive turning point, and in my opinion, the end of this long correctional wave and the start of a new rally to the upside, which should at least go into this $1,700 range, possibly even higher. And yeah, but in the end, we will have to wait for this. I mean, right now, as I said, there's, in my opinion, no satisfactory possibility to count all of this, and we will just have to wait. I mean, it's just a couple of days away we are just a couple of days away from New Year's Eve, so there's a possibility that gold might go up a little bit higher, but right now, and as well, if you look at, that's one thing I wanted to mention, if you look at the commitment of traders levels, so you can see where the managed money is sitting right now. I think down here we were already at around 200,000 long contracts or something, and this is typically a very high value, and in my opinion too high to kick off a rally yet. So this is another indicator, obviously, to me, that indicates that that this is just a move for market participants to secure themselves over the holidays, and once the holidays are over and nothing bad has happened, gold prices will likely, in my opinion, likely drop once more, and quite severe, something like this. And yeah, following this, there should be a rally. But first of all, we have to significantly, basically, reduce the long interest in gold. I mean, down here at the start of this rally, I think we were at 30 or 40,000 long contracts, and thus a lot of participants switched to long, and this resulted in this massive rally. And I mean, if we are already at 200,000 contracts at this area, so you can basically guess that there's not a lot of room for an explosive move to the upside yet. I mean, up here we were at, I think, at 240,000 contracts or something, and this resulted in just no more move up, but instead a correction and move down. Yeah, but yeah, we will see. I think we have to let the next days pass, and in my opinion, there's not yet a good, clear sign to do anything right now. It's just, yeah, very uncertain, and I mean, if this turns out to be an impulse, which in my opinion it really does not look like, I would have to find some way to count this, which of course is possible, but right now with the given candles and hourly, daily perspective, there's just nothing much I can say with certainty. There are 3 or 4 different scenarios. In my opinion, something along the lines of this is at the moment the most probable scenario. Of course, I could be wrong, but yeah, we will see about this. Yeah, so that's it pretty much for gold for the moment. And yeah, thank you very much for watching. See you soon.